Welcome, today is the 17th of March 2020, it's 7 minutes past 2 local time. This is EG taking out the lower stops as expected. Classic example, first counter move up and then target run. But this is not a live trade video, in fact this is a video where I would like to show you the dramatic market moves also on other markets and higher time frames. So we have the stock market crash. This doesn't really come unexpected. In fact, I wrote a newspaper article about this a while ago. We were in a 10-year bull market cycle, and that's unusual. On average, bull markets tend to be around 7 years in the stocks. So yeah, all it needed was like some kind of stimulus, like in this case the coronavirus, and the shutdowns, and the markets completely crashed. And I would like to demonstrate to you what kind of magnitude we're talking about. So this is like the US 500, now at 2450. Basically, in a nutshell, most stock indices, they erased the gains of the last 5-6 years in just a few days. And this dynamic is not unknown. In fact, the ones who made their homework and who looked at historical price charts, I will see that this is the base case scenario in the stock market. So people who just look at the last market years, they think that the market always goes up. This is of course not the case, and when it goes down quickly. And that's why I said in that article that, you know, people even who were here, they just should have, you know, cashed in some gains, okay? Because they will not catch the perfect exit point. At least they should protect themselves or trail, or, you know, do something which ensures that all the gains of the years before are not gone. But there will be people who just, you know, went long only and who don't want to trade actively, and who now are surprised by these crass moves. But this is how the financial markets work, okay? And look at that. I mean, this here is 2018 November. So basically we are, look, the price already kissed those kind of lows. It didn't take them out completely, but this was December 2018, and all the increases since then, they're basically erased for the ones who just went long and didn't do anything to protect their positions, okay? So to summarize, you know, this is how the stock market works. These are the big corrections and crashes, and, you know, the known black swan, I again refer to Nassim Taleb. And for most people this will be black swans. They can't foresee that, and they will be slow in their reaction. So we have a massive destruction of wealth around the globe. Let's also look at Bitcoin. We know that it's not a safe haven. It went down as well, now at 5,200 too. The low was just above 3,500. So a big crash as well in the crypto markets. A lot of destruction of wealth there as well. And here we go on the day chart, we see that, you know, the December 2018 lows were barely missed. And now it does a bit of a breather, but this is also a dramatic crash in crypto. Let's also look at gold. Gold came down quite a bit, now at 1487. On the day chart here, it's not a safe haven. That's not how markets work. I've said it many times, okay? These days are over where the stocks go down and gold goes up. We live in a time where over 80% of the volume is traded by algorithms, so there's a high correlation among financial markets, okay? They all move together, and this has to be taken into consideration if you're an investor or trader. Okay, so it's not that gold goes up because, you know, people go to gold. The only mainstream market which went up is basically the dollar. But actually the gold also came off a lot. And if you look at silver, it's even more dramatic. I mean, look, this is a weekly chart. It's trading at 12.4 now. I mean, there were times where it was trading at 49. Yeah, of course that's like 9 years ago, but it came off a lot. And look, this last correction here recently took out all the lows from 2008. And who knows, maybe they even go to the next low here. So very dangerous. You know, this was 8.55. So of course after this dramatic move there can be retracements and pullbacks and all that. But be very careful. Yeah, that's very, very important, because look how crazy markets can go. Yeah. Oil. First we had the Aramco Saudi Arabian price manipulation, then we had the Russian Saudi Arabian oil price war. Was pushed all the way down now to 28.9. I mean, just December last year it was trading around the 60 level. So a massive crash in the oil prices. Here 65. And as you can see, the price is still eyeing with a low. Of course we have the gap as well. And there can be breathers, but you know, it's not that oil or gold, you know, went up because the stock market crashed. Okay. And let's also look at pound dollar, the oldest currency pair in the world. Came down massively, now at 1.2. I expected the pound to go down. Unfortunately, I missed a nice long-term trade there, because from a causality perspective, it didn't give nice entries. Also, when you see, I mean, this high here, 1 to 3 was barely missed. I would have preferred to see this high clearly being cleaned. Yeah. And then, for example, to have like the money longies coming in a more dramatic fashion for something like this to be traded. So very tricky. Now took out the September level here. And of course we have the low from August. But yeah, of course also here there can be breathers. I mean, cable is a pair which likes to move. So it can even do retracements and all that. So it's a tricky one. But we're talking about like I mean, you know, look, from the high of over 1,300 pips, and just in 4 or 5 days it went down like over 600 pips. So that's really crazy and unusual. So just when we look at the day chart here, look, in a few days, 1,000 pips. So that's massive value destruction right here. Around the world, people lost a lot of money, especially when they were just holding stuff. And then again, people who made the research, they will have prepared at least to some degree for this scenario. But big fund managers also, some of them got caught off guard, even Ray Dalio apparently. So this can happen. I again refer to Nassim Taleb's The Black Swan. It's a great book, and it's about all that, yeah? How there can be like moves which are far away from the mean in terms of their deviation, which are fat tails, which are unexpected for a lot of people. And this is what we witness right now here in front of our eyes, and we witness this across markets. Now, of course, in foreign exchange, we have those kind of moves and crashes every day, especially in the lower time frames. And we buy and we sell, so it's a different game. But whenever you approach financial markets from a more basic perspective, like long only, or you know, buying a stock portfolio, or you know, buying metals or something like that, you will eventually get caught in these kind of scenarios unless you prepare for the downside, yeah, by protecting yourself with options or partial hedges and so on and so on. There are many ways. These days you can't approach financial markets in a very simplistic manner. Okay, these days are over where there were clear correlations. As you can see, everything affects everything. We live in a very interconnected world. And the coronavirus was just a stimulus needed for this to start. Many people asked when the market did a correction, oh, should I buy cheaply now? Around here I said no. So you can see people tend to be too early in these kind of moves. So yeah, just wanted to give you like this quick overview in terms of major financial markets, and stay safe.